Hello everyone, in this video I wanted to make a little intermezzo and to review the Irish Investment Limited Partnership from a Luxembourg perspective. Everyone in the fund space has noticed that Ireland has recently made a couple of very significant amendments to its toolbox to accommodate its amended Investment Limited Partnership. So this, as I understand correctly, this comprises of a number of initiatives, not only amending the Investment Limited Partnership Act of 1994, but also it caters for more guidance as to so-called private equity depositories, and it has abolished some restrictive requirements that apply to general partnerships before. In the past few weeks, there were many webinars and also industry papers written about the new Irish Limited Partnership, and sometimes some features were being compared with Luxembourg vehicles. And in this contribution, I wanted to review the Irish Limited Partnership from a Luxembourg perspective. But before doing this on some objective toolbox criteria, I want to briefly discuss of what this new Irish limited partnership entails and why it is so important that it got adopted. Well, over the past few years, there has been a general tendency of more and more alternative investment vehicles in mainland Europe. And there's a tendency going on from offshoring from countries like Cayman, Bermuda, also Delaware, and some other jurisdictions which have been adopting for a long time so-called Anglo-Saxon limited partnerships. So why are these so important? Well, it is very important when fund structuring to have a legal form, which at the one hand allows for so-called separate asset patrimony. So this is shielding assets from its manager, its depository, and from each of the individual investors. And at the other hand, allowing for limited liability of the investors. But in particular, in alternative structures, it's very important to have contractual flexibility as to the manager of the assets, as a lot of trust is being vested into the manager when acquiring assets and when disposing these assets. And these get always very tightly negotiated, and any legal form which allows for a lot of contractual flexibility in order to negotiate this relationship is of benefit in this respect. So how does the ILP compare to Luxembourg limited partnerships when taking a few objective toolbox criteria? Well, in the first place, Ireland adopted an amended investment limited partnership, which is basically of an Anglo-Saxon type. So often it is being compared to the Luxembourg SCSP, because it has no legal personality, it has a GP, it has an LP, it allows for umbrella structures, but it's more of the Anglo-Saxon type. But in Luxembourg, you do not only have the SCSP, which is really similar to the ILP, but you also have the so-called SCS, which is which is very similar to an Anglo-Saxon type of investment limited partnership, which can be more compared to the Scottish limited partnership, as this vehicle also has legal personality. On top of this, a very popular vehicle is an SCA, which is more of a hybrid between a public limited corporation and an Anglo-Saxon type of limited partnership. But in practice in Luxembourg, it's really used a lot, as it's opaque and being recognized as such for tax purposes. So how does the ILP compare further? Well, the ILP in the first place is an AIF, so it cannot be not an AIF, and this is one of the biggest differences between the nature of the ILP and the SCSP. And also the other two type of limited partnerships mentioned before can be both alternative investment funds, but also they can not be an alternative investment fund. So often it is the case that they're also used for carry vehicles or for secondary for secondaries. It's also the case that you can structure any other type of non-AIF collective investment undertaking in any of these three mentioned investment limited partnerships. If you're combining it with the Luxembourg product law, mainly the SIF, but also the SICR. So in the third place, the Irish limited partnership, as they call it in Ireland, is of a regulated nature. Well, in Luxembourg, from a Luxembourg angle, it is not really regulated in the sense that it allows for also, especially in the type of a QUAIF, for a fast track procedure. So the ILP has basically two types of AIF that they can be, and it is combined with the Irish AIF rulebook, as I understand it. So they can be offered to professional investors, but they can also be offered to retail investors, which the latter is not the case in Luxembourg. But still, with the before mentioned fast track procedure, it is more of a notification to the regulator, and the fund documents do not really get scrutinized by the regulator, but it's more of a notification. So from a Luxembourg point of view, it is more very similar to an SCSP SICAV RAIF, and not so much compared to a SIF or a SICR, which really is subject to scrutiny under Luxembourg laws. But it is in Luxembourg possible with limited partnership vehicles to be either non-regulated and to be regulated. So there's way more flexibility. But it is my understanding that currently the 1907 law, which is an unregulated type of limited partnership, is being revised to also allow for non-regulated partnerships. Although for me it's not so clear for what purpose that will be, but maybe also for the use of non-AIFs, but that's not really clear to me. So the fourth point is registered AFMs. QUAIFs can only appoint with an investment limited partnership for a transitional period of time of 2 years, in which they are subject to quite some AFMD and also some level 2 AFMD requirements and registered AFM, and afterwards they need to appoint a full authorized AFM. If I understood it correctly. In Luxembourg, this is way more flexible, as it is more, the registered AFM regime is more an adoption of the AFMD and does not require really a lot on top of it other than European requirements. So another objective criterion is the taxation. The ILP at all times is tax transparent. The SCSP as such is tax transparent if it is not having commercial purpose or not having more, or the GP does not have more than 5%. Some Irish news flashes have been indicating that therefore there is more leeway for tax structuring in Ireland with its ILP than in Luxembourg. I see this a bit differently, because if you have a commercial purpose, you cannot be an AIF. So this would then apply for SCSPs, for instance, in Luxembourg, which are not an AIF. So in the first place, they are not to be compared to an Irish limited partnership. But also, if you want to avoid the discussion at all, which is actually never a problem in practice, but if you would want that, then you can always opt in the RAIF product law, the SIF or the SICR, and this will allow you to have either tax transparency or tax d'amendement. So this is not really an issue. Also, the availability of the SCS, which can have the same taxation as an SCSP, and the SCA, which allows also for an objective exemption, means that in practice you can adopt all three types of Luxembourg limited partnerships, but also by choosing the one over the other partnership, you basically have the option between three different types of taxation. So tax d'abonnement, corporate being corporate exempt, or tax transparency, which I believe allows for a lot more variety of structuring than simply having only tax transparency. So then the point of listing in Luxembourg, there are some restraints. It is possible to list limited partnerships vehicles, but there are some regulatory restraints. For me, it's not really clear in what respect it is allowed now with the ILP or foreseen that they can be listed. So this is something that maybe an Irish lawyer would want to comment on. The last point before I want to conclude this video is with respect to blockchain and digital assets. In Luxembourg, it has been already tested that either if you have a shareholder register or you would want to list any legal form for investment funds, it is fully possible to do this on the blockchain. And we don't speak about replication, but we speak about native issues. So if you want to list then the issuance account, the CSD, and also the custodian accounts can be fully on the blockchain. The same holds true with the shareholder register. So this is so definitely the limited partnership vehicles are already adapted to the future. I believe that first the cash lag will need to be solved with CBDCs and before this is really going to be taken off. Anyhow, for me at the moment it's not really clear whether and to what extent this is possible in Ireland with the ILP. Similarly, it's also possible for limited partnerships in Luxembourg to invest in digital assets. There can be some regulatory restraints when investing in any stable coins or in cryptocurrencies, but in principle it is allowed. So concluding, the ILP is a very, very flexible limited partnership vehicle which will be adopted by many, in particularly above thresholds promoters, I think from the US and from the UK. But its use cases are more limited, and it's apart from that you could also have one for retail investors, it does not have any toolbox technicality which is really of benefit as comparing from a technical point of view with the Luxembourg toolbox. So I believe the Luxembourg toolbox overall allows for more variety of use cases and still is more competitive. I believe that the Irish still are considering to amend their 1907 limited partnership regime. For me, it's not so clear yet in what direction that will go. But having said that, obviously it is the case that for especially very big fund promoters from the US and UK, as referenced before, it's an extremely attractive vehicle which allows any kind of replication from offshore Anglo-Saxon types of limited partnership, just like the Luxembourg SCSP does. Of course, I'm not an Irish lawyer, so should you feel the need to add a comment or to correct anything of this video, please feel free to do so in the comment section. Thank you very much for watching and hope to see you next time. Bye.